All right, let's move to Lithium Royalty Corp, symbol LIRC on the TSX. Trades at about $12.49, $690 million market cap. What does the company do? They're a lithium-focused royalty company with a portfolio of more than 30 high-grade revenue royalties on mineral properties around the world that supply and are expected to supply raw materials to support the electrification of transportation, decarbonization of the global economy. Its portfolio is focused on high-grade and low-cost mineral projects that are primarily located in Australia, Canada, South America, and the United States. The company has deployed $53 million in capital so far this year. $51 million of that have been deployed since they IPO'd in Toronto in March of 2023, bringing a total number of potential royalties for the company to 32 right now. Let's look at the second quarter highlights for this business. Q2 2023 royalty revenue grew 98% to $838,000 from $424,000 in the prior year period. This was below market expectations based on the expectations this company set at its IPO. Second quarter gross profit grew by 280% to $691,000. This is good growth, but again, small numbers, and the company still lost 2 cents in the quarter, and adjusted EBITDA was a loss of $650,000 approximately. Subsequent to the end of the quarter, the company signed a credit agreement with National Bank for $25 million. The company had around $40.5 million in cash at the end of its quarter, but a significant amount of that was committed. Valuations are difficult to really value this business based on cash flow, as it was negative cash flow, and it has been since its inception. The company is expected, these are some estimates that I saw out there, to generate $8.7 million in 2023. Again, the company fell significantly short on revenue estimates for the first quarter, so you have to take those with a grain of salt. And expected to have a massive step up based on estimates into fiscal year 2024 to over $30 million in revenue. EBITDA is expected to remain negative this year, and then jump up with revenues to $20.3 million on the positive side in fiscal year 2024. If this optimistic jump can be achieved, the company would be trading at an EV to EBITDA of about 22.4 based on those expectations for 2024. Now, I'm going to, in conclusion here, take a quote from this company's latest presentation. They say they have long life diversified portfolio with 100% of royalties expected to be producing royalties by 2020 or 2030. Now, perhaps 100% of their current royalty portfolio will produce, but from watching a multitude of commodity-based companies try to bring their assets from production, I can tell you that the uncertain and volatile world of mining in any commodity, there are many speed bumps along the way, and expecting 100% success from asset discovery to successful production appears very optimistic to me. Let's take a quick look at the lithium prices. Brett's going to put up right now the past 5 years of lithium prices, as the underlying commodity and its pricing will have a massive impact on this business long term. Now, there's a huge surge you can see there in 2021 and a massive drop in 2022. This is one of the reasons why it's typically very hard to value these assets. One can use net asset value model, a model like that, but the price of the underlying asset is very volatile and can render models somewhat useless. Using a cash flow based model, the same thing is true, as cash flows are very volatile and dependent upon the underlying price of the lithium. Now, it is true that the royalty model this company employs can help allay some of the commodity risk, but if the asset is being mined and it becomes economical due to a low price of the commodity, then a royalty based off zero production is quite fruitless. This company does have a diversified portfolio of more than 30 potential royalties on some which appear to be high-grade, low-cost, long-life lithium mineral properties. So based on that, Lithium Royalty may offer investors a pure play exposure to the upstream supply chain for a raw material critical in the global trend of electrification and decarbonization. At present, it is richly valued, however, based on current cash flows, and it missed on its revenue estimates in the first quarter. The company will have to execute and should take advantage of any surge in its share price due to the excitement of lithium, the underlying commodity here, to shore up its cash balances, as it will need to continue to invest to match the valuation expectations at present. We would just continue to monitor this business, intriguing as it is at current times. I'm done.
I mean, I would love to invest in a lithium royalty company when you're actually producing some cash flow to the bottom line. But until that happens, and then putting a projection out to 2030, I mean, 2030, you're talking, 6.5 years from now, right? I mean, anything can happen between now and then. So
it's certainly going to have to grow into its valuations.
Still speculation, and largely, really, I would say when an exploration-based business.
Yeah. It's going to have to grow into those valuations. It's an intriguing segment to be in and a way to play electrification. But this company, like I harped on that point that they said that they basically are estimating that all 30+ of their assets will be revenue producing royalties. Perhaps that happens, like I said, but it's very difficult to take any asset from asset to production without any hiccups along the way. If the lithium price cuts in half from here, maybe it triples or quadruples from here. But if it's cut in half, some of the deposits that it is banking on, may not have the funding to move forward on their projects. They have royalties on, and then you're not going to have 30 out of 30 going to production. So, it's just, these are the risks in the segment. It's great to be optimistic on those, but I'd rather be realistic. So, nobody knows where the price of lithium could go. There could be extreme demand for lithium, but there could be a ton of assets being brought online and the price of lithium could go down. I mean, you can have oversupply. I mean, this is another sector we'll talk about, but cannabis. We thought, the sector thought extreme demand, but so much supply was brought online that, this sector has been decimated. So,
and then
it doesn't guarantee success.
From the legal sources was not what it was expected to be.
Yeah. And of course, it's a different sector. There's not a direct parallel there, but there is a parallel in that a great deal of supply is being brought online. So, you don't know how that's going to affect the price going forward, even if there is very, very significant demand.